The broadcast is now starting. All attendees are in listen-only mode.
Hello, everyone, and welcome to this webinar here at Nadex on knockout options, binary options, and getting started at Nadex. I'm going to be showing you some of the functionality of our trading platform as well. And in fact, I'm going to be couching all of this discussion leveraging our trading platform. And we've got some new functionality that we're really excited about that people have been asking quite a while for, so I'll be showing that to you as well. My name is Todd Rich. I'll be your host today. And I also have my colleague Nelson Diaz in the background. So this is an interactive session. Nelson runs our service team. And so as I'm going through all of this, if I go a little too quickly for something or I don't quite cover it the way that resonates with you, by all means, in the questions section, you can be typing questions into Nelson. He'll be able to answer anything that you ask. It's a great resource. It's a great opportunity for you to interact with us. So I do want to definitely mention that this is an interactive session. Before I get into the whole presentation, I do have to bring up our disclaimer that trading does involve risk and that the money that you trade with should be at risk capital. This session, as all of our sessions, are brought to you by our compliance department, and I need to make sure that you're clear on all of this. And one of the biggest takeaways from this disclaimer is I am going to be using real examples. I need to in order to show you the markets and our platform, and I don't want you to construe anything that I say today as a buy or sell recommendation. I am doing this strictly for your educational purposes. All right, enough of that. Here's what we're going to do today. I am going to do a review of knockouts and binaries. Knockout options and binary options. If you're not familiar with those terms, you will definitely be familiar with them afterwards. I'm going to probably start with knockout options because I think they are super cool. They're very easy to understand and actually a little intuitive once someone just sort of explains it to you. And then I'll show you binary options, and then you'll be able to see the difference between the two. And I am going to be doing this all on the platform. So you're going to be getting, it's not just a recipe. We're going to be in the kitchen baking a little bit. So you'll actually get to see it as we go. Before I jump away from the slide deck and I go over to the platform, I do want to emphasize not only is Nelson here to answer questions today, so please type questions into Nelson. Keep him busy for the next 45 minutes. But if you need to reach out and get some help from us at all, you can call us or you can email us. There's our phone number. Email us, customerservice@nadex.com. We're here to help you any way we can in your journey. So whether it's about your account, whether it's about the platform, whether it's about the products, anything where you seem to be having a bit of a hurdle, by all means, please reach out to us. Okay, I am now going to move over to our website and our platform to do the rest of this. So if you give me 1 second here, I am going to, here we go. We're over on our website. And before I click through, I always like to point this out as well. I just mentioned that there are a lot of resources available and ways for you to contact us so that we can help you. Another new piece of functionality on our website, if you look in the bottom right-hand corner, you'll see chat with an expert. And you click on that, it'll open up a little window and we're available to you. So it's just another way that we try to make ourselves available to you. And that's actually some new functionality and it's kind of cool. And lastly, I would like to encourage you, check out our webinars section of our website. Not only is it going to have everything that's upcoming, and I am going to put a little teaser, is that May 27th and 28th, we are going to be doing a virtual education summit. It's going to be a Wednesday and a Thursday, 4 hours each day of education. We are going to record it all. We will make it all available if you can't join us for all the sessions. But look there, you'll see emails come out to invite you. But day one's going to be basics. Day two is going to be a bit more advanced. And we'd love to have you join us both of those days or either of them or for part of either one of them. And then we'll also make the recordings available. As I mentioned, this is also being recorded. You'll find it on our on-demand section of our website. You'll also find everything that we do available on our Nadex YouTube channel. All right, let's go ahead and log into the platform and get going with knockouts, binaries, and our platform. When I click login in the upper right hand corner, I am actually going to use join the beta. I know that sounds like it's a beta. I want to use the main one. This is going to be our new platform. We are migrating to this, and it's a much cleaner experience. It's also easier to use, and we are getting close to making this our primary platform. So we will be migrating to this, so I do like to use this in our examples. And again, if you have any questions about any of this, type Mid to Nelson in the background. He's here to help you. If you haven't seen the platform before, the first time that you come in, you will see on the left-hand side, there's our panel for all the products, and we're going to jump into that in a second. There's the Workspace, which is where you'll see the charts and an order ticket, and we'll definitely be getting into that, and there's some cool new functionality there. And then your positions panel at the bottom, open orders, open positions, or your order history. And I'm going to leave, you can actually hide any one of these by hitting these double blue lines. I'm going to leave them open temporarily, but then eventually just for screen real estate, I'll probably move some of them aside. Let's start with knockouts. Here we are. We have three types of products, binary options. I'll mention call spreads as well, and knockouts. All right, and they used to be called touch brackets. So if you're confused, they're the same product, but knockout is the industry term for these products. It's what everyone calls them. So we should be calling them that as well. So what is a knockout? I'm going to go ahead and click on a knockout. And I'm going to go ahead and let's do an index this time. I know in the past I've done things like gold and oil because oil has been so popular of a trade. And I know that at some other more traditional brokerages, you haven't been able to trade oil. They simply put their customers on liquidation only because the volatility in oil was so severe they couldn't manage the risk around it. That was never a problem in Nadex. So people who wanted to still speculate on the price of oil have always been able to, and we didn't ever take it down, speculate on the price of crude oil using our knockouts or our binaries. In fact, you know what? Since I'm here, let's go ahead and start here. We're going to do oil knockouts, and then I'll jump over and I'll even show them to you on indexes. But what is a knockout? I'm going to go ahead and click on any one of these. It doesn't matter at first. And now I'm actually going to hide that panel. And the reason I mentioned it doesn't matter at first so much is because all of our knockouts are indicated on the chart. You know what? Let's make this a 1 hour chart. I think it'll probably make it a little easier to see the variance and the variation here. Here we go. First, when I say all of our products, knockout products, are available on a chart, notice that there are 4 blue vertical lines on the left-hand side of the chart, and those will represent the 4 knockout options that we've got available at that moment in time. If I click on any one of them, you'll notice how the dark blue lines will become prominent, and that's actually what you really need to be seeing, because what is a knockout option? A knockout is simply a directional play on the price of an underlying asset, but you've got defined risk, defined reward exit points, which is what you should be kind of thinking about anyway whenever you get into a trade. Now, I am going to just pick this knockout for right now. It does tell me in the upper right-hand corner which one I'm on. This is for crude oil. 24.50 to 29.50. That tells me now the range to 24.50, 29.50, 20. That's actually I had the wrong one. Let's put it on the right order ticket. Let's go ahead and go back to this one. There we go. 23.50, 28.50. I had the chart of one and the order ticket of the other. All right, so 23.50, 28.50. Well, what is 23.50? 23.50 is the floor. And you'll see that it makes sense. It's the bottom dark line. 28.50 is the ceiling, and that is the dark line to the top. Now, what am I looking at for oil? Now, there is an indicative price for a current barrel of oil, and you see that on the order ticket right here, 26.06, and you even see it on the chart as it updates. I move my chart, but there it's right around 26.06. It's a rounding error on the pricing feed. Now, what are you looking at? And by the way, we are also in a demo environment. I do want to point that out. Your experience for prices will be a little different in a live account. And in fact, if I jumped over to a live account, you would see that. But with oil trading right here around 26, now here it is, 26.12. Notice how you can either buy or sell levels right around that, 26.11, 26.14. That is how you trade a knockout. If I think the price of oil is going to go higher, I can click buy. And if I were to buy 26.14, all right, that's what I'm buying. And I know that current level is 26.12. If oil were to go all the way up to 28.50, all right, I could, if it touches 28.50, I am knocked out of my trade, and I stand to potentially profit. For my max profit is $236 on a one lot. Now, if I were wrong and oil went down to 23.5 and it touched 23.5, I would be knocked out of my trade again. So your boundaries, your floor and your ceiling are where you'll be knocked out of a trade, whether you're long or whether you're short. That is where you'll get knocked out. And you know going into it what your maximum potential loss. So if I were to buy one here at 26.14, I could potentially lose $264 if it went down and touched 23.5. And the expiration on this is 1 day and 2 hours. Notice that's also on the order ticket. It is also on the chart. Now, if I thought oil were going lower and, hey, this thing rallied up and I think it's going to lower, I could do the exact opposite and I could sell it. If I were to sell it, I'd want oil to go down. And there, notice that my maximum risk, my maximum potential loss, my maximum potential profit have changed slightly. I mean, that's because we are right in the middle of this range, which is why we offer 4 different ranges where you can manage how close to one of the edges you'd like to be. If I were going short and wanted to tighten my loss, if it were to go higher, I could choose this range. All right, this is the 22.50, 27.50. Notice what I've done is I've brought my ceiling down from 28.50 to 27.50. So my maximum loss is only 134, but I've only got up to 27.50 for margin of error if I were wrong. So you can sort of decide, I don't want to risk that much. I really do think it's going lower. I could sell one here at 26.15. That's just because I'm going to use the bid. I know oil is right in the middle there. Isn't that amazing how the price of these will pretty much hover right around the indicative price at the moment? And if I were to sell one, I'm speculating that the price of oil is going to go back lower. I'm looking at my charts. And if I were wrong and it went up and hit the ceiling at 27.5, I'd be knocked out for a loss, maximum loss, 135. If it were to go lower and make it all the way down and touch 22.5 again, I'd recognize maximum profit, $365. And I've got 1 day and 2 hours to see what happens. Now, what happens if oil doesn't touch either one of those boundaries? okay? It will settle in 1 hour and 2 day, one day and 2 hours. Let's get that right. And my profit or loss would be the difference between the level that I bought or sold and where it settles. So if I were to sell one here at 26.15, okay, and it actually settles a little higher, I will have a little bit of a loss. I just know my maximum loss would be if it went all the way up and touched the ceiling. So I could potentially lose 135. I could lose somewhere in between if it settles higher from where I sold it. Conversely, if it actually went lower, I would stand a profit, and if it settles down below the level I sold, 26.15, and it settles down, I would make a profit all the way down to there, knowing that my maximum potential profit would be if it made it all the way down to 22.5 and I got knocked out. If not, it'll settle and I would make some profit, just not all of it. In fact, I would just want to show you how easy it is to place a trade. I'm just going to sell one here at the bid. And just a one lot. Let's just make it 20, place the order. My order goes into the market. You get an acknowledgement that the order was sent, and oh, that's kind of cool. And notice that I now have something in my position. And in fact, if you noticed, right when I sent the order at 26.20 and it ticked up. I actually got filled at 26.21. I got filled a little bit better than what I was looking to do, which is fine, but oil's ticking higher. But my speculation is that I think it's going to go lower. And I know exactly going into it what my potential maximum loss, maximum potential profit. And now, if I thought oil were going to rally and I wanted to have more room to the upside and stem my downside risk, I could. I'm going to click this last, the highest one. I mean, this one's actually touched quite a bit here. I mean, we're right on the edge. But if I wanted to buy one right here at 26.26, my downside, if it went down to 25.5, I would be knocked out. So I've only got 75 ticks of room here, but that means I only am, or 76 ticks, I only can lose $76. But if it kept rallying, I've got much more room to potentially profit if I thought it was really going to head back up above $30 a barrel in the next day. Now, if you notice, these on oil, they're all $5 wide markets, which means each contract is worth a total of $500 between the buyer and the seller. So you'll notice that the maximum loss, the maximum profit, when I'm using limit orders to calculate, it should always equal 500. Now, if you're using market orders, you actually put some protections in place. It'll actually calculate a little differently because it's going to assume that you get a worse than anticipated fill potentially. A little bit of a longer story, but I just wanted to kind of focus in that these are always worth $500. Something on the charts that I would really like to share, if you noticed, we do have tear-off charts finally. So when I click tear-off, you will see a chart here, and I can tear off multiple charts. And if I had multiple screens, because screen real estate is at a premium, I'm on one screen right now. I could potentially have multiple. I can have my chart of oil up. I can have my chart of the Nasdaq up. I can have my chart of gold up. I can have some commodity pair charts open. Oil tends to move with the Canadian dollar because the Canadian economy revolves a lot around oil. So people do look for relationships like that. I can have multiple charts open at once. We do have tear-off charts. The other thing that we also do is we have tear-off tickets. So you can have an order ticket for an oil contract and an oil ticket for the S&P 500 up next to their charts. So if you've got multiple screens, you can have multiple order tickets up and multiple charts up. Very cool functionality, and we are very excited that we were able to put that out there. While we are on the subject of charts, I would like to show you a little bit of the charting functionality that is available. because a lot of the analysis that people do when they're trading these products it really revolves around technical analysis. And you can build, and it's nice that you can build your charts how you want. You can build each different chart the way that you want. Now, what do I mean by what you want? You can clearly customize the interval of your charts. You saw me do that earlier. These are candlestick charts where each candle represents the time frame that I'm selecting. So right now, each candle is a 1-hour candle. If I want shorter time frames, I can get 10-minute candles, all right, and where each one of these candles represents 10 minutes. So, the time frame that you use certainly impacts some of your technical analysis. If you're curious about what I was just saying, we are definitely going to be covering that in our virtual education summit in 2 weeks, both from a basic and from a slightly more advanced level. So we'll be doing more around that for you to learn about candlestick charts and how to read them and how to set them up and how you can use different indicators. When I mention indicators, I'm going to hover over indicators here and drop them down, and we've got a variety of indicators that you can populate your chart with. So for instance, if you like to look at moving averages, I'm going to come down to moving averages. And if you aren't sure what one of these mean, you can always hover over the eye and get some additional education or some information about what this particular indicator represents. When I click on that, it is going to populate my chart. Here's the moving averages. And since this is a 1-hour chart, a 1-hour bar candlestick chart, so each one is 1 hour, here's a 20-hour moving average, a 50-hour moving average, and a 100-hour moving average. And you'll notice, and if you want to change any of these, you can click on it and change how what parameters you would like to see, even the colors and the thickness and how you want it displayed. But because, for instance, a 20-hour moving average is a shorter moving average, it's going to move along with the chart a little bit better. Whereas a 50-hour is going to be a little bit more smooth, and the 100, the red one, is going to be a lot more smoothed out. And you notice that. And people use moving averages for when they converge or they diverge, and they represent potentially support and resistance levels. When I mention moving averages converging and diverging, that's actually another indicator, a MACD, moving average convergence divergence. And it helps you read some of that a little bit better. Don't want to go too much detail more on that, but we will be covering some of that when we do our virtual education summit. I can turn on or off any of these. If you're not familiar with some of these, it is definitely helpful to learn what some of these are and how you could potentially use them. You can also put drawings on. And now people like to do a lot of their own drawings, and I tend to agree with that, actually. In fact, here I'm going to go ahead and move this chart a little bit more so I can do a bit of drawing on it. If you wanted just to do a trend line, you wanted to build your own trend line, it's as easy as clicking on trend and then trying to find and fitting your line, clicking it, and I've got my own little trend line where this has clearly been in a bit of an uptrend using a 1-hour candlestick chart, and potentially this level could be where you see some support, or if it breaks through, maybe that would then be resistance if it tried to rally. Things that can help you are your drawing tools. You can even draw on, if you wanted to use, say, a horizontal line and you wanted to try to pick your own support and resistance. So I'm going to not zoom in, I wanted to zoom out. And let's give this a longer duration and spread it out some. All right, so I just wanted to give myself, you could clearly see, look at this oil. It got crushed. Now we rolled over to the new contract, so now we're kind of trading in here. But if you wanted to put some potential support and resistance lines that you see, I could choose a horizontal line I could find places where I think I might be seeing support, and I might put another one where I might want to see where I'm, looking at levels of resistance. And you can use that in your analysis. Notice with my knockouts, I've got some support and resistance lines that I'm looking for, and it can help you choose um, which knockout contract that you would want to use. And notice I got my support and resistance lines that I made. Again, completely arbitrary, so don't take that as buy, sell, or hold recommendation. And then you could see it around its knockout levels. Now, this brings up a very important point, is just because there's an expiration associated with a knockout doesn't mean you have to wait to expiration to see what happens. Right. So, since we've been on here, oil has actually rallied a little bit. Remember, I sold one down at 26.21. It's rallied a little over 10 ticks. If I had bought oil down there and just wanted to take a quick, $15 profit, $10 or $15 profit, I could sell it right back out, take my $10 or $15 and reassess and, look for another opportunity. So just because there's an expiration doesn't mean I have to wait to expiration to see what happens. Yes, I know if it touches my floor or my ceiling, I will be knocked out. I know that if it settles in between and never touches, I will either have a profit or a loss, the variance or the difference being where I bought or sold and where it settles, or I can trade out of it early. So I could put this, I sold oil at 26.21. If it goes up a little higher and I want to say, you know what, I was wrong, it's going to keep going higher, I could just buy it back and I don't have to wait until it goes up to 28.5 for me to experience maximum loss. I could buy it back for a partial loss. Conversely, if it does turn and comes back down, I don't have to, hope for maximum profit, hoping it hits 23.5 and I get knocked out. I could always buy it back, say down at 24.80 and just take a partial profit. So you've got plenty of choices, and hopefully that helped you understand knockouts. Directional plays. I am now going to bring back our markets. I've been showing you crude oil. We've got them in gold. In the indexes, also a very popular product. If we click on the Nasdaq, you'll notice the US 500, that's the S&P 500. US small cap, that's the Russell 2000. US Tech 100 is the Nasdaq 100, and then Wall Street 30 is the Dow Jones Industrial Average. And you'll see the exact same thing where we've got knockouts. And let's go ahead. This is the Nasdaq knockout. Notice how I've got my ceiling and my floor for this particular contract. I got the indicative price right here in between. It's also on the order ticket. This is a weekly contract, so it expires a little later than oil. Another hour. Oil closes an hour earlier. And again, I've got my different markets over here that I can choose from. So I can choose which range I want. Now I'm looking at a 2-hour chart. Maybe here I'd be better off looking at a 30-minute chart to help me. So choosing your time frame is important when you're looking at these. Notice for the Nasdaq, these contracts actually are 60 points apart. All right, so this one goes 88.65 to 90.15. A Nasdaq knockout, the total is 600. So these are 60 ticks wide for the floor and the ceiling, and we have to choose ranges for those that make sense for the particular contract. So while oil's worth, the total is a potential $500 contract, in Nasdaq it's 600. So just something else to pay attention to. If I bring up the S&P 500 and we bring that over here, this is 50 ticks wide, all right, 27.87 to 28.37. This one's a $500 contract total. But it's a great way if I wanted to speculate on what the market's going to do, what's the S&P 500 going to do. I can buy or sell a knockout going into the position with defined risk, defined reward. So all right, so that's and it's pretty easy to understand. And again, notice that the levels I'm trading here on the S&P 500, it's right around where the indicative price is. So here we have it's trading around 207. It looks like it was just ticking a little lower, but the price of the buy and sell levels are going to be right there, 2660. We're 2610, 2660. I mean, people were getting in front of it and selling because it looks like it started to tick a little bit lower. You're seeing markets that are dynamic. Okay, I think we've covered enough on knockouts. I would like to jump over to binaries. People brand new to the exchange, that's a lot of what they're coming for are binary options. And here I want to point out that we've got some very short-term binary durations, 5-minute contracts all in Forex currency pairs, lots of price action. We got 20-minute, these around indexes, also some pretty good price action. Commodities, indices. Let's go ahead and click on an index and let's use the weekly. And I just want to show you what the difference is between a binary and a knockout. And I'm going to go ahead and click on one binary contract in the Nasdaq. Okay, and I'm going to hide this. And let's take a peek at what I'm actually looking at. Now, a binary contract is a simple yes or no question. I'm making a prediction. Is something going to happen? Yes or no. Here I clicked will in 1 day and 3 1 day and 3 hours. Will the Nasdaq finish higher than 90.28? All right. Now, Nasdaq is currently way down here. All right, so let's actually pick one that's a little closer. It's around 89.40. Let's go. Well, let's actually go to the 89.32 contract. So it's just above this level. Notice when I click on it, all right, when I click on this contract and I'm looking to buy, if I were to buy one of these, the blue shaded area on the chart is where Nasdaq would need to settle at the end of the week for this contract to finish in the money. If I thought it were going lower, I could sell it. And all of a sudden, you notice now the chart, the red section is where I would need NASDAQ to settle for this contract to finish in the money. Now, what does in the money mean? A binary contract is only worth $100 maximum. Maximum, it's a $100 contract. And what you're trading, the prices that you see are at that moment in time, it's the market pricing the probability that this event is going to occur or not. So with NASDAQ being right here, just above 98.40, that's the current price, 98.40, it's the level 98.32 is let's go with the buy because it's a little bit more because it'll make it in the money. The market is saying at this point in time there's a 60% roughly, I'm going to pick the middle between the bid ask, roughly a 60% probability that this will finish by the end of the close tomorrow above 89.32. Right at 89.32, the probability is going to be right around 50. It's going to be a 50-50 chance. And so what you're really doing here with knockouts is you're taking a directional play, but at that moment in time, the probability of you being right or wrong, you know what it is going into it. And since the contract can only go to 100, your risk reward is clearly defined. If I buy a contract, I can't lose any more than I paid. So if I were to pay 59, let's just make it, and let's just make this 58. We'll make it an even 58 so you can calculate it easier. The market's ticking all over the place. If I were to pay 58 for one of these, I'm risking $58, and my prediction is that it will be higher. It will settle higher than 89.32. Now, it's got to settle higher than 89.32. For instance, it has to be 89.32.01. If it finishes exactly at 89.32, it's not greater than, and you'll notice it tells you, I mean, it's a greater than, will finish higher than. The contract then settles at 0. So unlike a binary has a knockout level above and below, and whether you go long or short, you know where you would be knocked out. And if it doesn't touch one of those, you'll make a profit or lose based on the difference on where you entered the trade and where it settles. A binary option is either 0 or 100. It is all or nothing. The contract either finishes in the money and the answer to the question is true and it's worth 100, or it's false and it's worth 0. So if I bought here, I would be risking 58. If it were to finish above, my maximum profit would be 42 because it would settle at 100 and I would make $42. If I thought it were going to go lower and I'm going to sell one at 60, all right, I'm just going to pick 60 just because it's a round number and it's right in between. And by the way, you can place orders. Let's go ahead and place one. I can place an order in between. Notice there's my 60 offer. You can trade between the bid ask, and you'll notice that's actually in my order section. Rather important to show you. It may trade there or it may not, but you can certainly put an order out there. In a live market, you'll have a different experience. We are in a demo environment. I have no idea who's looking at these. So it will be a different experience. Notice I'm in a demo. But if I sold one at 60, because I thought Nasdaq were going to settle lower, I sold one at 60. So I collect that. That's the most I can make, all right? Because the worst case scenario is it settles above. Oh, look, it actually traded. So I noticed that I sold one at 60. All right, so now I got two positions. If it settles above 89.32, this would be true. It would go to 100. Since I sold it for 60 and it went to 100, I can only lose $40. My maximum loss is $40 if a Nasdaq continues to rise and it settles above 89.32. If it settles at 89.32 or lower, it goes to 100, and I mean, it goes to 0. I apologize. It goes to 0. So this contract settled at 0. I sold it at 60. It went to 0. I made my $60. So if it settles above and it's true, the contract goes to 100. If it settles below, the statement's not true. It's false. It settles at 0. If I buy it and it goes up, my profit is the difference between what I paid and 100. If I sell it, that's my maximum profit, and it would need to settle below for me. And you can see that. I love how we color it on the charts. Hopefully that was clear. Binaries are all or nothing. Knockouts are not. Binaries trade the probability of an event occurring. Okay, so I notice how these probabilities keep changing. I mean, I sold one at 60, and since I've sold it, Nasdaq is actually, the indicative price has ticked down, the probability has gone down. Now, once again, I don't have to wait until expiration. Let's just say I sold that at 60 and I wanted to buy it back at 52 and make $8 minus my the commissions. I can actually go and place an order to buy one lower. And, if I walked away and it went down there, all right, there, I placed an order to buy it back at 52. You see it here, again, demo environment, but you also see it in my orders. I'm looking to buy one at 52, and that would be against the one that I sold at 60. All right, and if it trades, it trades, and if it doesn't, it doesn't. Again, I'm just doing this for demonstration purposes. If I really had a conviction, I might not want to buy it back that quickly. If I really thought the market was going to keep going lower, the Nasdaq were going to go lower, I might look to buy it back lower. All right. But again, I don't have to wait to expiration to see what happens. Because it can get pretty dramatic, because as it approaches expiration, and I would like to show you that quickly on a short-term product. Let's just take a look at 5-minute. If you're looking for a lot of price action, um, here's a contract. Let's just click on one of these. I'm click the euro. Let's make this a 1-minute chart. Okay, and I'm going to expand it and make it so it fits, because these are so short term, and you can actually see how it's going to impact. This contract expires in 3 minutes. All right, so what's going to happen is these probabilities, notice how the probability down here for the euro to finish higher than 107.85, and oh, look at this, the euro's ticking lower, and watch how quickly this comes. This was in the 70s. As it gets closer and closer to this, it's going to go to 50.50 if euro were to come down here, and it'll quickly decay away down to 0 if it kept going lower. Notice how the price of the one a little higher, the one we had selected, has ticked lower. These probabilities will move very quickly. Binary options, as you approach expiration in the next, I mean, this is going to finish in 2 minutes and 30 seconds. They either have to go to 100 or 0. So the probabilities, I mean, this probability is decaying away very quickly, because there's very little time for it to rally back up. I mean, look at this. And it went right through. It was 70 when we began. Now it's below that level. It's below 50.50. And as the euro continues to click lower, notice that the strike all the way down at 107.83 is now in the 70s. And if the euro keeps ticking down here, this will also decay. But if it finishes in the next minute and 46 seconds above this level, it will go to 100. So a lot of price action in binaries, and I like to demonstrate it with longer term for you to see it, but you can see how quickly in the short term this can change. And if I really think it's going to stay above here, I'm just going to go ahead and buy one. And I don't know if I've, oh, did I place an order? Oh, look, let's just go ahead and, oh, I can't even get it. You know what? It's ticking up so quickly. Oh, you know what? I think I actually bought one. There we go. I bought one at 74.25. I do think it's going to finish higher. I think, hey, the euro might. No, I think I actually bought 2 of them. I think even though it's ticking lower, there's only 54 seconds for this. And notice the ones I just bought, they're trading up toward 100. And so it was an opportunity. I bought 2 of these right around 73.12. And look at that. I'm probably going to quickly, now if I'm not comfortable and I don't want to wait the 30 seconds, I can click on this order and just get rid of it, and I recognize my profit. All right. I could have gotten 5 more points out of that if I waited, but I didn't know what was going to happen in the next 18 seconds. Again, just to show that you don't have to wait all the way to the end. But if you want a lot of price action, trading in binaries and short-term binaries is something that you might want to consider. With that, I want to say thank you for joining us today. Hopefully you got a clear understanding of knockout options and binary options, and how you can use the platform, as well as here I'm going to right click on the chart, all the different indicators, drawing tools that we've got available to help you in making your decisions. And the fact that we now have Tariff Charts, so you can have multiple charts or multiple order tickets open at any given time to help you if you've got multiple screens. We love that we've got that new functionality. I also hope that you've been keeping Nelson busy in the background with plenty of questions. And I do want to remind you, we do have that chat function on our website. And again, one last time, if you would like to reach out to us, you can certainly give us a call or shoot us an email. Please check out the webinar section of our website to see what's coming up, as well as to peruse all of our on-demand content, or check out our Nadex YouTube channel. And with that, I would like to wish you all good luck in the markets. Thanks, everyone.